Well, it's a pretty picture if you are a bear, but yes, if you are a bull, then clearly it's an ugly picture right now on the screen. And as we've been calling it the fear factor for a reason. There's fear in the market, and that's something which is visible. Markets don't fall 5% in 5 days unless there's the fear factor, and that's what's happening right now. There's panic factor across most of the equity markets, led by China, of course, but China alone is not the worry, as I pointed out earlier. The German DAX is cracking 4% on a daily basis almost. So every day we are seeing Dow futures down 300 points while we're trading. Nikkei is down 3 to 4% almost on a daily basis, so or at least 2 or 3 times this year. So that's clearly making a lot of people nervous, and that's what you saw in trade today. In fact, the Sensex hit a 52-week low. The Nifty is practically there. So both Sensex and Nifty are almost at 52-week lows. A lot of individual stocks are at 52-week lows. When index stocks, so many of them and so many of these heavyweights start to make 52-week lows, you know that the market has a problem. Larsen & Toubro is at 52-week low. ICICI Bank is at 52-week low. Axis is at 52-week low. SBI is at 52-week low. ITC is almost getting there. It's only Reliance and HDFC Bank that's, who are trying to bat for the bulls. Otherwise, if you look at the metal stocks, Vedanta, Hindalco, other commodity stocks like cane. So there's quite a bit of decline. But one internal that broke the bulls back today was clearly the advanced decline ratio. Because even on Monday, when the market was down this much, the advanced decline ratio was 1:2. Today we had advanced decline ratio of 1:9. And we had cash market volume surging. The market had been warning for last 2 or 3 days that a lot of mid-caps traders have overstayed their welcome, and that warning clearly was something that a lot of traders would not have heeded to. But today, you saw the impact of that cash market volume surge, and you saw a big decline in the markets in the mid-caps. The market is oversold. Make no mistake about that, but the market can remain oversold for a long period of time. If the US market and DAX can fall like this, what are we? We are, at the end of the day, a high beta stock. But at the same point, in my conversation with a lot of people, the sense I get is that maybe we're now approaching a time where some bit of bargain hunting could be there over the next few days.
Okay, we're going to perhaps see bargain hunting, but it's pretty clear the triggers for the Wall Street are not in India, but seem to be in China. Lata, let's come to you now. The whole world reacting to what's happening in China. We've seen what's happening with the Chinese yuan. It hit that 5-year low yesterday. Why exactly is the world rattled?
Well, it's the official Chinese devaluation that is worrying. That was moving, it moved violently in August, if you remember. And then it was a very slow depreciation, largely 0.1, 0.05 a day. But this week it has been 0.2% in the first 2 or 3 trading days. And today it was 0.56. And the offshore yuan, which is more freely traded than renminbi, is actually widened, moved more far apart. It has depreciated more than the official yuan. And now the depreciation from August levels is as high as 8.5%. Possibly today the Chinese authorities intervened in that market as well. That's the talk. Now, what is worrisome? See, the Chinese yuan was pegged to the dollar. Chances are now, with the dollar appreciating and China not doing as well, they want to unpeg, and they want to peg to a basket of currencies. So while against dollar it looks seriously depreciated, they're probably moving in step with a basket of currencies. This is probably a communication problem. The other issue could be they also want the yuan to get more market determined. These explanations will not worry the market. What worries the market is, does the PBOC know something about China which the rest of the world doesn't know? That is what is rattling the market. And I'll tell you why that fear comes, because if you notice, the markets fell about 2 o'clock or 2:30. That is when the FX data from China came out. And that showed that $107 billion of FX reserves had been expended in December. For all of 2015, $512 billion had been expended. The reserves, the famous Chinese reserves of $3.5 trillion, 4 trillion, is now down to 3.33 trillion. So there's not much back. In India, we say that we should have at least 8-month imports, 9-month imports. In China, that comparable figure is actually 3 trillion. So, you're very close to your threshold. There are some people who fear that, therefore, that big Chinese threshold is not really there. And if it really is, 250% of debt to GDP that Chinese banks have, and if much of them are getting rotten, then there is not so much of a backstop that they have in terms of being able to mend various parts of the economy. So China may slow faster and may land harder than what most people thought. It is this that is driving the fear factor. Separately, of course, this is being accompanied by crude falling for its own supply-demand dynamics. The fact that Saudi and Iran are probably trying to make each other poorer and thereby impoverishing anyone who produces oil. So that is a separate fear factor that might render a lot of funds out of pocket and see redemptions. The third factor that we should note in the entire space is that India will be the last one to sink. The rupee actually is usually strong in the Jan-March quarter because that's when exporters bring back their money. As well, we just had that auction of FII limits. So actually, dollars came in today. My guess is that the RBI did not support the rupee today. The rupee supported itself, which means it's really an outstandingly stable currency at this point in time. So while we should worry about stock market reverses, the only point we don't have to worry about, perhaps, or the last thing we should worry about, is the Indian rupee.
The Indian rupee currently trading at 66.92. The world rattled by the falling forex reserves of China, down $500 billion in all of 2015, sinking to a 3-year low. Thanks, Anuj and Lata, for joining us and